employers' national insurance. Please give an example of what the impact will be for, say, a firm with 50 employees. Now, Derek, we can't, we could do that calculation for you, but you'd need to let us know what salaries the 50 employees were paid, because it would work a little bit like that. I mean, Paul and I did a quick back of a fag packet, sorry, I can't say that anymore. Do they have back of a coaster summary? And essentially, if you employ one person on 70,000, that's your employment allowance wiped out. So therefore, the additional employer's national insurance kicks in at its full rate.
Yeah.
But do you want to talk a little bit more about what's changed for employers' national insurance?
Yeah, absolutely. So this was probably one of the better trailed one, and I think there was a concern that they could actually increase it more than they did. But essentially, the previous rate of employers' national insurance contributions was 13.8%. They've increased that rate to 15%, and I think it's important, and I'm sure people appreciate. But unlike employees' contributions, which kind of are a higher rate up to the higher rate band and then drop, it's 15% on everything over the threshold, which is when you think about it, is a massive cost to employ people. And the other nasty that was thrown in was that they've reduced the threshold at which contributions are payable by the employer. It was 9,100. It's gone down to 5,000.
Yeah. I was just to interject there, because we do have quite a lot of sort of single person limited companies as well. And quite often there we would have the advice of pay yourself the 9,100 potentially, because then you don't pay any national insurance, employers' national insurance contributions, but you get the others, and you get the stamp towards your pension, or your state pension credit.
Yeah.
So now that the lower earnings level has not decreased in line with the employer national insurance threshold, that means that if you were to do that, you wouldn't get the credit towards your state pension.
Correct. Yeah.
So, but Catherine's done those calculations for us, and we still reckon from a tax point of view, if you're looking at company and individual, it's more of an admin burden. Yes, you're going to pay more tax, but it's actually still more cost effective to actually pay yourself right up to that personal allowance of 12,570, and just suck it up that you're going to have to pay some employers' national insurance, and it'll kick in at about, I think, month 7 or 8 rather than just month 11 or 12. So it's administrative.
It's as much for those businesses. It's as much the micro businesses. It's as much an administrative hassle as it is a real cost. But I think it doesn't apply. This doesn't apply to the sort of sole director companies. But the other thing they've done is to kind of increase what's called the employer's allowance, or the employment allowance rather. So which is effectively a discount off your national insurance bill. So historically, you would get the first 5,000 of your national insurance knocked off, for want of a better expression. They've now increased that to 10,500. So there is a bit of a discount, and the idea was that supposedly takes smaller employers out of the increase. And actually, if your NI bill was previously between 5,000 and 10,500, you actually get a little bit of a win as a consequence of this, because even though the rates have gone up, you're still getting that discount. But that is very much at the micro business.
Absolutely, and it really only impacts people probably with salaries of less than 150,000. Really,
it softens the blow to a limited and very limited extent for larger employers, but the smaller employers do get the very small employers do get some benefit out of it. I mean, to the question about 50 employees, I did it again back of a whatever it is we're allowed to call it these days, calc. For somebody, let's say they had 15 employees who they paid them all 30 grand a year. The interaction of all of these means that their employer's NI bill would go up by about 7.5 grand a year.
So that's a lot for 15.
If you're employing 15 people, then that's a big old cost, and that's on top of something we'll touch on, I'm sure, is the national minimum wage increase as well. If you got 40 employees, so 15 employees at 40 grand a year, then that's closer to 10 grand that your increase is. You can see that fairly quickly it starts to mount up. The more employees, or the better paid your employees are. So I think it is a real impact on the cost of employment, and we've talked about it a lot, but it has to impact on that investment decision. Do I bring somebody new in? do I give that person extra hours?
So the national living wage then. So again, I think we did a very, very quick calc on that and reckoned that, so if you're bringing somebody in, maybe a uni graduate who's 21, no experience at all, the cost to the employer of bringing that person in due to employer national insurance contributions and pension contributions is going to be a minimum of about £28,000. So there's a knock-on impact there, that if you're paying somebody with no experience £28,000 or 25,000 plus cost to you, then you need to think about your more experienced people as well, who traditionally might have been on 35, 40,000. They're going to need a bigger differential. So your whole pay scale and salary scale needs to be revisited.
Yeah, I mean, I think that's absolutely right. In the interests of recognizing the experience and the value that experience brings to the business, you're going to have to relook at all of your sort of salary structure.
Yeah.
Because otherwise, you are going to get. Well, I've been in this job for 5 years, and let's be honest, people, it's very much a what's in it for me kind of situation, isn't it? Why is Jane or Fred coming in from university, and actually because of the national, the living wage, they're only on a couple of grand a year less than me now. Whereas I've been at this for 5 years, and they don't really know very much.
And I really truly believe in paying people properly.
I totally agree. Totally agree
that wages need to go up in line with inflation. But as a small business owner, it's really difficult to put our prices up in line with inflation, put our prices up in line with wage increases and so on. And there are certain sectors that are going to be hit really, really badly by this. I mean, those that pay people a little bit more, so the small businesses and professional services are going to be hit quite badly by that. But let's look at retail, leisure and hospitality. They're really going to be up against it.
Yeah, and I think you're right. I think it's a real, it's a catch-22 situation, isn't it? Because you really want people to be paid fairly and paid a living wage for the work that they do. But when your margins are wafer thin, and in a period where we've got cost of living pressures even still, and I know the inflation rate is coming down, but the reality is that prices aren't going down; they're just going up less quickly. So you've already got those baked in additional sort of costs for individuals. So, discretionary spend like retail, hospitality, leisure, inevitably that's the first thing that gets squeezed. So you've got pressures in all directions for those businesses. Not to mention, and again, I don't want to say that I'm at all against the extension of some rights for sort of workers, because I think again we need to make sure that employees are treated fairly and properly by their employees. But I think the government underestimates the pressure that does create, because it's almost like they get, small employers, particularly in those low margin, high kind of people cost businesses, really are getting hit from pretty much every angle at the moment.
It becomes you almost need to employ somebody to manage all of the compliance and the rules and regulations, which becomes tricky in itself.
Yeah, and so I think I wish I knew what the answer was. I mean, there's been a lot of chat about, should the government introduce a reduced VAT rate, for example, for retail, hospitality and leisure businesses.
They did it during COVID, and it did help.
It absolutely did, and I think it's one of those situations where there needs to be, unfortunately, and this was frankly a fault of the last government, and this government have also carried on. They look at it in a very piecemeal way. There doesn't see. I mean, we've got an industrial strategy which is coming through. We've got a corporation tax roadmap, so there does seem to be an element of let's think about planning for the future. But I don't know whether they necessarily want, all arms of government that kind of are introducing all of these costs and legislation for smaller businesses actually sit around a table and say, well, okay, what's the overall impact for this, and what do we need to do to support these businesses in a meaningful way to make sure that they aren't, having to spend all of their time filling forms in, as opposed to actually, doing what they want to do, which is sell.
And what's the potential impact on job creation? Will those jobs be available for uni graduates, or will employers start looking for either taking school leavers or only taking very experienced people? or in professional services, looking at areas outside of the UK for their employment?
Yeah, I think, the whole employment market, I've got a strong view that, the gig economy, as people like to call it, is going to become more and more. I think, that whole thing about, is somebody really an employee or are they self-employed?
So then the IR35 piece becomes, so yes, people will use more consultants potentially because the costs are lower.
Yeah.
And I think one of the other things we should just mention in passing at least is that the plan is to bring the national living wage for 21 euros down to 18 euros. So they're trying to narrow that gap so that everybody has the same minimum wage.
And again, it's hard, objectively, it's hard not to support that, but I think there needs to be some thought as to what the impact is of that is on the employers, as opposed to as well as the individual.